afternoon. This is the weekend update for Buy Sell Short for Saturday, November 10th. We're starting off with the Dow 15-minute charts, and you can see over the last 2 weeks into the election, it's been essentially a drop, consolidate, drop with bounces in between. And you can see right here on the 15-minute chart that we've fallen yet again into another bullish falling wedge. If we pull up the daily chart, and just the recent daily chart, you see RSI is oversold. We're oversold on stochastics, and the little spinning candle that we saw on Friday can mark a near-term bottom. And if you look at the Fibonacci retracement, actually you get a better idea if we look at a one-year chart. This is the chart we showed on Thursday. We bounced right at that 38% Fibonacci retracement from the December lows of last year, and we are deeply oversold. So what we would need to look for is a move back through 13K, the 200-day moving average. We've got the 20-day right now sitting up there at 13,155, about 300 points higher, and as you can see, the Dow daily chart really does not spend but a few days away from its 20-day exponential before retreating to it or bouncing back to it. So we have that as a positive to look forward to, at least in the near term. What we're facing right now, and you'll recall the webinar we did a week ago, Trading Uncertain Markets, we've gotten through one of the uncertainties that we went over during the webinar, the election uncertainty, and now we are sitting with the fiscal cliff uncertainty, and that is really going to dominate the headlines over the next couple of weeks, and hopefully it's only the next couple of weeks. We had some back and forth chatter on Friday between the House and the President, thumping their chests and, pretty much saying or looking to see who's going to blink first, and that's bad for the market. If we see a deal made, especially in the next few days, the next couple of weeks, I have no doubt that we will not, or that we will see a rally to new highs. That's essentially what I'm looking for. What a lot of people are forgetting is that we are in the midst of QE infinity, with the Fed pumping in $85 billion in liquidity every month into the markets through mortgage repurchases. We also have the Fed continually expanding the M2 money supply, and over the last 2 to 3 months, we've seen a massive amount of liquidity pumped into the system. I believe the numbers I read was about $180 billion in liquidity added to the system, and that has a run rate of about $1 trillion in new liquidity hitting the market. And that kind of liquidity typically has a lag time of a few months, anywhere from 2 to 6 to 9 months lag time, and that latest liquidity splurge hit the market a couple of months ago. We need to get through this fiscal cliff nonsense very, very quickly. If we do, I believe this economy is going to have a very nice 2013. If we don't, things could be ugly, and there's just no way to sugarcoat it. We're going to continue to be a high cash stance until we get a deal. That's just the way things are going to be. We're going to see the market bounce back, then we're going to see the rug pulled out of it. Friday was a great example of the kind of market action we can expect over the next few days until we get some sort of deal out of DC. We will be a market that moves on rumors, and if I was to give you guys a market to look back at as an example of what to look forward to right now, it would be the nonsense we saw last year between August and November with the European debt crisis. Remember, if you recall, every other day it was one of those things: Greece is going to get a deal, market would rally big. Oh no, Greece is not going to get a deal, market would tank, back and forth and back and forth. And that's probably what we are going to be looking at over the next few days. On Friday, we got a nice little pop because Boehner and Obama were both speaking on Friday, so the assumption was that we had some sort of deal already sketched out, and we saw the market bounce on that. And of course, we've come to learn that they haven't even barely talked yet, and as such, the market sold off into the close. So, that's the kind of thing that we are trapped in right now. And while the charts can give a roadmap of where we can go, remember what I went over in the webinar. Uncertainty can tweak even the best of charts, and we are in big-time uncertainty markets right now. Now, we do have a lot of positive things to look forward to. If you go to the website, I posted in the chat room as well. It's a market stat, and I love market stats, and it goes over the last 15 presidential cycles over the last 100 years. 13 of 15 times we have seen the market rally on average 4.7% in the fourth quarter. We are red right now for the fourth quarter, so that would imply a 6% plus bounce in the markets, just going back to the average norm. A big up here is 8%. Now if we get a fiscal deal, I think we will blow that 8% out of the water, and that's just my thinking. The two times that stat did not work was 2008 and 2000. And both of those times, we were in the middle of a recession. We are not in a recession right now. We are in a low-growth environment. We are not in recession. We also have massive liquidity being pumped into the system by the Fed. If we get a fiscal deal very soon, this market will see new highs, in my opinion. And right now, all we are going to be doing is treading water till we get that deal, and then we can ride this market all the way to new highs into the new year, and that's where we stand right now. Let's look at another technical indicator I like to talk about, the McClellan oscillator. You don't really need to know the details of this. I go over this indicator every couple of months, but on Friday we hit a reading of negative 49, and you recall the last time we looked at this, the last low reading we got on this one was back in the midst of the rally back in June and July, where we got a negative 51. We had a negative 110 in May into June. So this is something to keep an eye on when it gets down to these deep oversold levels. We're at an area right now where we could bounce back. This is the certain bounce back point. When we're down minus 90, minus 100 on the McClellan oscillator, we usually have an extremely high rate of a rally. Right here, possibilities, 60-40 of a nice little bounce back. Again, we are a victim to what is going to happen in Washington over the next few days, as simple as that. The charts are suggestive of a big rally if we get that deal. The question is going to be, what level are we going to rally from? Right here or down here? And that's essentially what we're looking at. Small caps actually did pretty decently on Friday, I will say. We are also in a bullish falling wedge. We're at the bottom of the channel right now. We were able to get back into that channel on Friday. And of course, it goes without saying that we are deeply oversold on all these indices right now. And not to beat a dead horse, but again, we are just at the mercy of Washington right now. The only stocks I'm really going to go over for us to look at this week, ANTH, which really blindsided me this week. Not too happy about it, but it is what it is. If we only have one of these bad plays every quarter, I would consider that good. Anyone that says they don't get beat over the head in the market is full of shit, in my opinion. And this is a stock that I believe we will make our money back on, which is why I held on to it. And as I said, once we start to see this stock start to rebound, we can pick up decent size and average our way out of this play. These guys are presenting on the 13th, and the real reason it seems for this sell-off is they filed an ATM at the market shelf filing on Thursday night. Doesn't mean they're going to sell it, just means they've got it out there with MLV. Those are the same douchebags that house us on the sideline on GALE. All they do is financing, and what's criminal in this market is these douchebags were probably the ones shorting this stock down because they knew the announcement was going to come. That's just the kind of market we're in right now, but the stock is deeply oversold, any sort of positive news on this conference, and we could quickly see a rebound to that 20-day exponential at 91 cents. So that's what we're looking forward to this week. The other stock I want to go over is Motor. Very, very nice bounce back for us on MOTR from our ads midweek on the bounce off the 20-day exponential. Now, you recall Carl Icahn owns 30% plus of this stock. They posted positive earnings a few days ago and sold off to that 20-day exponential bounce. This is a stock that I think could be an outperformer in 2013. I mean, we've got a profitable, Icahn-owned, mobile ad, small cap stock trading under $1 in a very, very nice uptrend right now. RSI is uptrending. We got a nice little bounce. You know how I love you guys who watch these videos that when stochastics come back to the 50 level and bounce off it, I love that. It typically indicates a strong stock. Next breakout is the 200-day moving average at 77 cents. And if we check out a one-year chart on this stock, I could see us over the next several months trading back up to this 120, 145 area going into next year. This is probably going to be I don't want to call it a January popper play. Let's call it a penny dog, 2012 dogs of the NASDAQ for next year, a stock that could have a very, very high win potential going into next year. So these are the only two stocks I'm going to go into. The PopScan had a couple of plays, but nothing really jumping out yet. And what I would tell a lot of you guys, especially new guys, look at the webinar we did. It's in the education section of the website. If you weren't able to attend it, I put the link up there so you can actually watch it now. It's only about 20-30 minutes or so. And for a lot of you guys, hand sit right now and wait for the better trades. Trades are, what's out there right now is you've got a lot of traders trying to flip stock on other traders, and that's not a conducive market for us. It's not a market I want you guys to be going big size in. So for that reason, I'm not calling a whole lot of plays. You just need to look at Twitterville right now. Not a whole lot of stuff. All you hear about are the few stocks going up 1 or 2 pennies, or you've got penny traders posting on stocks like Apple, how they're supposedly buying it and going long a stock like Apple at $500, when 99% of their stocks trade under $2 usually. Tells you just how bad the market is. But be patient, guys. We've got all the ingredients out there in this market for a massive rally over the next few months. Once we get through this fiscal cliff uncertainty with all that Fed money out there, I believe we are in store for some very good times. So right now, we are conserving our cash, we're protecting our portfolios, and waiting for those good trades to come. And it could come as early as next week, so be ready. That's it for the video. Have a great weekend, guys. See you in the chat room on Monday.